Welcome to Face the Analyst. I am your host, Jay Taylor, and I'm really pleased to be with Bill Howald. He is the president and CEO of Rye Patch Gold Corp. It trades actually over the counter in the United States under the symbol RPMGF, and it also trades in Toronto under the symbol RPM. There's approximately 95 million shares of stock outstanding. The stock is trading at about 35 cents. So it has a relatively low market cap of around $30 million. Relatively low, I say, because of the number of ounces of gold this company already has in the ground. And my feeling is that it's not that well known. So I'm very pleased to have you, Bill, on Face the Analyst. Welcome.
Jay, thank you. Thank you very much for having me on.
Really good to have you. And honestly, you're probably the only person I've talked to in this series of Face the Analyst that's not Canadian. So it's nice to know that it's not only the Canadians that are producing gold, that we can do it in the U.S. too. Anyway, you talk to us about your 3.9 million ounce resource. Is that a 43101 resource number?
That's correct. It's all 43101. 3.9 is gold and gold equivalents. We actually, if you break it down, we have 3 million ounces of gold and 40 million ounces of silver. And again, all 43101 compliant, all in Nevada.
And that's all in Nevada, and there's an Oriana trend. I know I'm familiar with the Carlin trend and the Getchell trend and some other trends. The Oriana trend is a fairly new trend. I think it's not as well known anyway.
It's really an emerging gold trend. What we've seen is since April of '09 between Barrick and Midway Gold and Rye Patch, we've delivered over 6 million ounces of gold that have been 43101 compliant. So really an emerging gold-silver trend.
Now, as I understand it, you have several different deposits. We're talking about surface deposits. We're talking about oxide deposits that can be heap leached. And for those people that aren't that familiar with the mining industry, heap leaching involves less capital cost. Usually can get into production more quickly. The return on investment can be very, very good. But as I understand it, you have several of these deposits, and that they could become satellite deposits where you would actually haul the ore to one central leach pad. Is that right?
Yeah, what we have, our land holdings are very compact along the Oriana trend, and we're very focused in that area. What we have are 5 projects in our portfolio. 4 of them are along the Oriana trend and within about a 10 to 12 kilometer area. So they're very close together. You can kind of envision this multiple ore zones and one operating entity trying to take ore from multiple sites.
Okay, I understand that these are open meaning that you haven't found the boundaries, the limits of these oxide deposits. So talk to us a little bit about what you know about the upside exploration potential here. Maybe you know something about the size of your drill targets.
Right. Well, at Wilco, we just finished a program in 2010 where we started to intersect some high grade along the north side of our section line resource. Right now we have a core rig drilling, and we're drilling that high-grade zone, trying to understand what the controls are and whatnot. But that zone is still open, as well as the section line discovery, which is still open to the west. So the majority of our drilling to date has been to try to quantify those resources. We want to really understand how big they are and you know, where they might be headed. Same thing at Lincoln Hill. We just announced some results about 2 weeks ago. Our resource at Lincoln Hill is about 400,000 ounces of gold and 9.5 million ounces of silver. That zone at Lincoln Hill is still open, as well as we were able to identify a new area with similar strike potential as the Lincoln Hill resource. So all of these are still evolving. It's early days, but you know, our goal is to get to a real critical mass of gold and silver that you know, put us on the radar screens of maybe some other companies.
Right, indeed. Well, 3.9 million ounces is a nice start.
It's a good start.
You have a really aggressive drill program going forward, I'm sure, in 2011 on these various...
That's right. Our main focus for 2011 will be along the Wilco area, along this high-grade zone. At Lincoln Hill, obviously, we have a brand new discovery there, so we want to follow up on that. And then we've got a project that's a little bit farther away, just south of Barrick's Cortez Hills discovery that we'll be drilling on here towards the middle of April. And I think from, if you know, you're looking at kind of news flow, we'll have news flow from now till probably July or August.
News flow is the lifeblood of the junior mining
That's
sector,
right.
so I think investors will want to pay attention. Bill, you have a lot of history in Nevada. You were a leading geologist, I guess, for Placer Dome, was
That's
it in
correct.
the past? Talk to us a little bit about the potential for these projects beyond the oxide surface projects, because Nevada, I know, you can find these really high-grade gold deposits underneath sometimes a limestone cap or some sort of a cap.
That's right.
That caps the really high-grade stuff, and you have a small amount of gold that leaks out. So do you see the potential for something really high-grade here at depth?
Well, like at our Wilco property, as I mentioned, back last year we drilled, and we had some just phenomenal grades that we intersected in drilling up to 1.5 ounces gold at about 300 meters. So right now we're following that up. That zone, as we understand it now, is about 100 meters by 200 meters, again still open to the west. It sits, if I can use my hands, the majority, the bulk of the mineralization sits in anticline or folded rocks. And on the north side is a steeply dipping structure which hosts the high grade.
Oh.
So right now we're drilling that structure, trying to understand and quantify the high grade along it. Same thing at our Lincoln Hill discovery. We have a surface oxide zone that's kind of a stockwork zone that lays right at the surface. And internal to that, we get these high-grade zones that can be up to 2 ounces gold over, significant thicknesses, 8, 10 meters. So those are the kinds of things we like to see in the drilling, and the lower-grade stuff comes on its own.
Do you see Rye Patch ever becoming a producer, or do you think that your role in life is to explore, develop? Your exploration is what your history is, what you're known for, where your skill sets are. But do you see Rye Patch as possibly becoming a producer, an open pit heap leach producer, or something bigger with high grade, or what's the strategy of management?
Well, if you look at what's happening in Nevada right now, you have companies like Newmont and Barrick and the litany of groups all mining already. If you look at production history over the last decade, you've seen that Nevada produced almost 9 million ounces of gold in '98 and is now just a little bit under 6 million ounces in 2009. So what you have are the major miners all mining. They all have capacity in their mills. You recall in the 80s and 90s it was find a mine, build a mill. Right now they're struggling to keep that capacity full. What we kind of envision us as being, we're very good at finding. In fact, we're finding those gold and gold equivalent ounces at about $1.25 an ounce. Very robust finding cost. And you've got the major miners and mid-tier miners all mining. What we think the hand and glove fit is for us to be sort of the supermarket to those majors and mid-tier producers already operating in Nevada. So, what we'd like to do is build some critical mass of ounces of gold and silver that puts us on their radar screen.
Sure, and hopefully there's more than one that would be interested in you, so they could get a little bidding war going on.
That's right.
Very good for investors.
As you know from our stock, Kinross holds about 15% of
right. Yeah, Kinross, let's talk about that a little bit, your shareholders. You also have Sun Valley, and in terms of the share structure, it's pretty tightly held. I mean...
That's right. I mean, between Kinross and some of the funds that hold our stock, they hold more than 50% of the stock. Insiders hold about 10%. So you can see with just a few people, about 60% of the float's held. 60%
of the float is held. So, I mean, I'm looking at a 35-cent share price, I think, somewhere in that range.
That's right.
3.9 million ounces with loads of upside exploration potential. You would think that the majors, they're certainly aware of you.
That's correct.
You would think that some of those guys might take a run at you right now.
Well, I would hope not. It would be kind of tragic if that happened at these prices. Right now, we're trying to get some awareness out that there's a company with some ounces in the gold in Nevada and upside potential.
Yes, you certainly don't have the infrastructure problems that a lot of projects. I mean, I'm sure access is right to your project.
No, that's right. I mean, Jay, if you drive a Cadillac, you could drive your Cadillac right up to any one of our properties.
I don't drive Cadillacs, but I could get there, tumbleweed and all.
You could get there pretty easily.
Drive right there. Well, it's really interesting. I'm wondering, at this price, what do you think the biggest risk? There's always risks. So what do you think the biggest risk that shareholders would face if they bought the stock at 35 cents?
Well, obviously we have a lot of gold in the ground, so we're a little bit tied to the gold price. So if you believe gold's going back to around the $200 mark, you probably wouldn't want to get involved. If you believe Robert McEwen that gold's going to 5,000, then perhaps 35 is a bit cheap. If you look at just the various deals that have been done over the last 12 to 18 months, what you find are companies are paying about $50 per ounce in the ground. If you apply those metrics to rye patch, you see that given our float and fully diluted, we should be trading somewhere between $1.50 $2 per share. So
yeah, I was going to say, it seemed to me that the market's pricing your ounces in the ground at something south of $10 perhaps
that's
right
correct.
now.
That's correct.
And so that would suggest a potential five-fold increase based on what you have in the ground now.
That's right.
With exploration potential. I think I saw somewhere you sort of, maybe it's an inside target of outlining maybe 10 million ounces or so. Is that sort of a...
yeah, I mean, you know, we tried to come up with a goal that was challenging and could be real and yet realistic. Again, we don't know what that critical mass of ounces is to get us on the radar screens of, say, somebody like a Newmont or a Barrick, right? But certainly, I believe if we had 10 million ounces, there'd be no question.
There's hundreds of other companies out there. Why rye patch?
That's a really good question, because you're right. I was just over at the conference here, and you know, you kind of get lost in the rows there. I mean, they all start to look the same. But I think if you look at our track record, if you look at the management, if you look at our exploration team, you'll see that, you know, it boils down to the three basic things: people, projects, and place. Mm-hmm. And rye patch has all those right now.
Anything else you'd like to tell our viewers before we conclude our discussion today?
Well, I just want to really tell you thank you, and I appreciate the time we've had.
Well, likewise, I appreciate the time as well. It's a pleasure learning more about rye patch. I've heard your name for a while, and now I know more about you, so
well, thank you very much.